Greetings everyone. We continue to the session that we were discussing about the third component of the partially exempted or partially taxable allowances, that was the special allowances, and out of which we already discussed some before you. That is the traveling allowance, daily allowance, conveyance allowance, helper allowance, academic allowance and uniform allowance. Now to understand them more better, let us go for a small illustration and implement these conceptual learnings into practical. So I'll just first read out this illustration 7. It says compute the taxable salary of Mr. Arun. The particulars are the salary is rupees 5 lakhs, dearness allowance not forming the part of salary, it is 20,000, house rent allowance is 1,20,000, actual rent paid is 1,50,000, CCA is, that is city compensatory allowance received, is rupees 200 per month, and medical allowance is rupees 100 per month, and the place of service is Chennai. So if it is Chennai, Chennai is a metropolitan city and therefore we will consider 50% of the salary in one of the component for exemption. So let us do this illustration in order to understand things in a much better way. So medical allowance is given 200 per month. Let us make it annual. That is 200 into 12, 2400 annually, and sorry, that was CCA. Medical allowance is 100 rupees per month. Okay, let us have the rough work here. So here we have to first of all for calculating the taxable salary, we'll just put some of the figures that are straight away there for the here. So maybe we can say right here as computation of salary of Mr. Arun. So here first point in the question as given, we'll put it here, salary, it is rupees 5 lakh. Then we have the DA, that is dearness allowance. Though it is said not forming a part of the salary, that means we won't use it for some calculation part for some other component, but here as a part of taxable salary, yes, this amount will be taxed. So 20,000 as DA. Then next is CA, that is because HRA we will just do some rough work before calculating it, or maybe let us calculate HRA. The third component is HRA. Because this is not a taxable amount, this is the, we have to compute the taxable amount of HRA. So we have to first find out the least of the following. So least of the three. So first let us calculate the three part, that is HRA received. HRA received is house rent allowance is 1,20,000. Actual HRA received is 1,20,000. Second part is rent paid minus 10% of the salary. 10% of the salary, which is equal to rent paid is amount is 1,50,000 as given in the question. This is here. 1,50,000 minus 10% of the salary. 10% of the salary is 5 lakh and its 10% is 5,000. So the taxable rent paid, this point comes out to 1 lakh, 1,45,000, sorry. 5 lakh ka 10%, it will be 50,000. So this will be 1 lakh. Then the third component is 50% of the salary because he is living in Chennai and Chennai is a metropolitan city. 50% of the salary, it is simple, 2,50,000 out of this 5 lakh. So we compare, the least is the exempted amount. So 1,20,000, 1 lakh and 2,50,000. Out of the three, the exempting amount will be 1 lakh because this is the least. This is the smallest figure. So actual HRA received is 1 lakh. Taxable HRA is equal to 1,20,000 minus least of the three, which is the exemption. This is exemption amount. So this is taxable HRA is 20,000. So this will be taken as the taxable HRA. So coming to the third component, HRA, which we will take it as 20,000 as per our calculation on this side. Now coming to the next component, we have salary, DA, house rent allowance done, actual rent paid adjusted there, CCA. City compensatory allowance, which we calculated here as 2,400 picked from this side. And then last is your medical allowances, which again we have calculated here as 1,200. So that will be also taken up because it is a fully taxable allowance. So this is all. I think we have just 5 components here. So we will add them together and we get 5,40,000, 6 and 3. Okay, so the total comes to 5,43,600 as fully gross salary. This is our gross salary. Okay, from this to get the taxable salary, if the question asks, then we will be, there is an standard deduction, if you remember. So from the gross salary, we will deduct a standard deduction as per section 16, subsection 1A, that is of 50,000. 50,000 is given here. Once we deduct that, we will get the taxable salary. It will be 4,93,600. So this is a bit of comprehensive question where I tried to take in all the heads that we have already discussed in the theory part, and I hope this is clear to you. Moving on to next, that is the B category of special allowances. First, again, we will go into the theory part, that is what are the components and how they are to be treated. Now, these allowances are designed to again partially offset the additional maybe personal or maybe living expenses borne by the employees due to the nature or location of their duty. They are partially exempt from taxes subject to the limits which are notified by the central government under Rule 2BB of the Income Tax Act. That is, I would put it here. It is the special, the deduction or the exemption is allowed up to the limits which are which are notified by the by the central government under Rule 2BB of Income Tax Rule 1962. Okay, so the limits are notified by as per this section. We do not do it on the basis of actual consumption or on the basis of any kind of calculation. The amounts are exemption amounts are already defined. We will take into consideration only those, and any amount which is received beyond the specified limit, that will be taxable under this head as salary. Coming to the first point or first component, that is a special compensatory, which includes tribal, scheduled or agency areas allowance. So we call it a special compensatory allowance. This allowance is granted to the employees serving in a remote and tribal or scheduled area where living conditions are very difficult and amenities are very limited, and therefore many employees, they are not interested in getting the postings in those areas which are defined under the special, under this category. They are listed under this category, maybe because of their lack of infrastructure, maybe because of there is hardship because of weather or because of hilly region, or because of lack of amenities and basic facilities, and therefore in order to compensate for that hardship or for that sacrifice of not choosing well developed urban areas or central areas, maybe because of the lack of infrastructure or maybe higher cost of living, this allowance is given, and here the exemption limit is rupees 200 per month. It is specified by the act, by the section rule, as we have mentioned just now above. So it is the states that where they are applicable or where they are available, applicable are Madhya Pradesh, Tamil Nadu, Uttar Pradesh, Karnataka, Tripura, Assam, West Bengal, Bihar and Orissa, and not any other, only these states. For example, suppose a government officer, he is posted in a tribal area of Assam and he receives rupees 500 per month for this. So his exemption amount will be only rupees 200, and the remaining figure, that is 300, will be taxable. Okay, so we have to take this fixed amount that has been already prescribed as an exemption. The balancing figure will be taken for taxation. Coming to the next, allowances for the employees in the transport system. Before going into detail, I would just I would like to draw your attention towards something. That is, we have in the previous preceding chapter or topic, we have studied about conveyance allowance, traveling allowance, transport allowance, and employees working in the transport system. So please, though maybe literary point of view, you are getting them as if they are for moving from one place to another, but please always try to keep these things explicitly clear in your mind and learn them, that what are they, because all the allowances and they are given for some specific purpose. Either it is for movement from one place to another, that is from office to workplace, or from office to maybe for selling purpose, office for going somewhere else on a tour or maybe getting transferred, etc. So please keep those things clear in your mind and do not confuse yourself among the terms that are used, conveyance and transport and traveling, and thinking that you just mix up in your mind. Please don't do that. So coming back to any allowance for the employees who are working in the transport system. Here the transport system means that anybody who is working or maybe is an employee employee in transport services such as railways, airlines, shipping maybe, or maybe roadways. He's a bus conductor, bus driver, or a pilot anyway. And they often spend their long hours away from home while they are on duty. So these people who are working in the transport companies or the transport system, they often keep away from their houses for very long period. On and off, they are always traveling from one city to another or from one country to another country. So for that, there is a compensation. This allowance is a compensation to meet their personal and incidental expenses while they are traveling, because they are not getting all the home comforts while they are traveling, so they are compensated for that. So the exemption limit here is that we have to compare two figures here. One figure is whatever allowance is given, we have to compute 70% of that. Okay, 70%, as I said, 70% of such allowances or rupees 10,000 per month. This or is here, and whichever is less. So we have to compare between these figures. That is, it has to be 70% of whatever total amount of allowance he receives, or 10,000 rupees per month, whichever is less, that will be taken as an exemption. The balancing figure will be taxed. So I hope this is clear. We will be understanding it better when we will implement these things in a practical example. Then third is children education allowance. This allowance helps employees to meet the education expenses of their children. For example, anyone and it is limited to 2 kids only, and the amount of exemption allowed is 100 rupees per month per child, up to a maximum of 2 children, and 2 the most elder ones, not adult, but I should say elder ones. For example, anyone is having 3 kids, then the exemption will be provided only for the first 2 child and not the third one. And this exemption is allowed in order to promote or encourage people to send their children to schools for the schooling purpose. So this allowance helps employees to meet their education expenses of their children. As I said, exemption limit is 100 rupees per month per child, and it is up to 2 children. For example, suppose an employee with 2 children will receive suppose he is receiving 500 per month as the children education allowance for his children. Now the total amount he is receiving from his boss is rupees 1,000, but the exemption from this 1,000 will be only 200 rupees, that is 100 per child. So 200 into for 2 children, it will be, the exemption will be 800 rupees only. Okay. So because the exemption is 100 per month, and for the whole year it will be 12, 24, yes. So the total amount of exemption is just 200, he is getting 1,000, remaining 800 will be taxable amount. Then next is the hostel allowances. Hostel allowances, they are suppose similarly to, it is an extension of if the kids are living in a hostel, he has to be sent to some other city to study for education purpose, and there they have to live in a hostel. Then here the exemption limit is rupees 300 per month per child, up to maximum of only 2 children. So that means if you are sending them for education, the total exemption that they are getting is 100 for school fees, that is education, and 300 for hostel charges. Now this is also to compensate the increase in expenditure of the employee, because they have to send their children to hostel. For example, suppose if 1,000 per child is received for them by them, 1,000, and the exemption is suppose rupees 300 only. So here it will be 300, means 700 rupees will be taxable and 300 will be exempted. That is 1,000 minus 300. 300 is the exemption limit. So rupees 7,000, and if it is for 2 children, if the employee has 2 kids, then it goes 700 into 2, that is 1,400 will be the taxable amount. The next one is transportation allowance, transport allowance. See, again another word, transport allowance. The transport allowance is provided by the employer to his employees to help them meet the expense of daily commuting from, between their residence and place of work. That is office and residence, that is there. Here in this we have residence and office. Every day commuting from residence to office is provided by the employer and to his employees. This allowance actually recognizes that traveling to and fro from work often involves a significant cost burden, particularly in urban areas with high transportation expenses. Earlier, the up to till 2018-19, that is assessment year 18-19, the provision was that a fixed exemption of rupees 1600 per month was available to all salaried employees, regardless of their mode of transport or distance travel, whatever. The exemption was limited only to rupees 1600, and they did not consider any kilometers or distance between the workplace and the residence. From 2019-20, assessment year 2019-20, this was changed. So the current rule that follows is the general exemption has been withdrawn for most of the employees after the introduction of a standard deduction, which we are giving, under section 16, subsection 1A, that is. It says no exemption with effect from 2019-20. Why? Because of the standard deduction. It is 16 subsection 1A of the Income Tax Act. So, and this standard deduction is amounting to rupees 50,000 on your gross salary. It amounts to rupees 50,000 on your gross salary. So, till 2018-90, it was till 2018-19 only. From after that, it was removed. There is no exemption because of the standard deduction which are provided. But here the exception, there is an exception to this standard deduction and exemption part. The exception is for only relevant for the disabled employees. The exception for disabled employees, it is the exemption continues for the employees who are blind, who are deaf, dumb or orthopedically handicapped, that is they are differently abled. The exemption is up to rupees 3,200 per month. This special relief acknowledges the additional mobility challenges and higher commuting cost faced by such individuals, because obviously they are making extra efforts to reach workplace. For example, suppose if we have some visually impaired or visually challenged employee, he receives rupees 3,500 per month as transport allowances. In this case, rupees 3,200 is exempted, and remaining rupees 300 are taxable. And the main objective or the purpose of this exemption given to these special people are to promote inclusivity and support them with disabilities by easing their commuting burdens. So, these are some of the special allowances in order to meet the personal expenses that we discussed today. There are more to be learned, so we will continue in the next session. Thank you for now.